How does the great state of Maryland tax you on $60,000? That's what we're going to talk about here today. So hang in there because Maryland's up next on our list of states and how they tax you for $60,000 of income if you're a retiree. So subscribe, my friends. Comments, thumbs up always help. So let's just dive right into this as we do. And so what we do here is you go to heritagewealthplanning.com. And you know you're at the right place when you see that little Peaks Island logo there. That's my island I was born and raised on in Maine. Then what we want to do is go up to Tax Tools, an interactive tax page, right? Tax Tools, interactive tax page. And I got my pen, which I do, so we're going to have to do some drawings. And when I start drawing, look out, world, because my art is like Picasso. Or what's that guy's veneer or something like that? As you can see, I'm very sophisticated artist critique. Anyway, so then you go down to the federal tax tool. And we don't want that at this stage. We want the smart asset tax tool, all right? And so what we're going to do is when the smart asset tax tool comes up, we're going to hit the great state of Maryland, which is not as bad as you think. I'm telling you, a lot of these states are actually not nearly as bad as you think from an income tax perspective. Now, some are quite bad from that you think would be better. Wisconsin, Indiana, pretty bad. From an income tax perspective, though, there's some states that are actually much better than you think. And frankly, New Jersey is one of them. Now, when it comes to property tax, it's not quite the same, but still. All right, so we click on that, and that takes us to the great state of Maryland. And now what we're going to do, and Maryland's different, I'm telling you. And I'll get into a couple of things real quick. But what we're going to do is we're going to say we're married filing jointly. And we're born in 1952 to take advantage of the two standard deductions on the federal tax of the code because of the Trump tax bill. I'm going to try to do that if my Wi-Fi will cooperate. All right. And so now we're going to have $40,000 in Social Security income. All right. And we're going to have $12,000 of IRA distributions. Now, in Maryland, I want you to just hang in there for a second because we want to talk about other stuff later on. So I'm going to get rid of this pension right here because we don't have that. And we're going to hit enter. What's the great state of Maryland charge us? Nothing. Now, they do got 241 of local taxes, so I'm not sure what that's about. That's a negative. So I don't know what that is. But anyway, so Maryland doesn't charge you anything on $40,000 Social Security and $20,000 of IRA distributions. But let's do this. Let's do $20,000 of Social Security and $40,000 of IRA distributions. Wink. And let's see the difference. And Maryland still doesn't charge anything. Pretty good, huh? Now, the feds do, because in this case, you have to pay your well, let's just draw it out for you. So Maryland still doesn't charge anything. This is what I tell people. A lot of people say, oh, Maryland. Now, first, a couple of things about this. You've got to remember, my friends, if this is retirement accounts, you just don't want to roll over your qualified plan, your TSP 401k to an IRA if you're going to retire in Maryland. Because they do tax your IRA differently than they tax your 401k and your TSP and whatnot. You just don't want to do it. No reason to bother. So I take this with somewhat a grain of salt because I'm not sure if they're distinguishing here between IRA and 401k. Because if you look at the Maryland tax code, it's pretty different. Absolutely. And if you're ignorant of that, it doesn't matter. Ignorance is it won't get you off on paying your taxes. So just be careful. So just keep your plan in a 401k or move. All right, so first thing we got to do when it comes to figuring out our taxes in retirement is we got to figure out what's called our provisional income. Or show a little bigger here. There we go. A provisional income. And what that does is we take half of your Social Security benefits. So we have $20,000 of Social Security, which is going to be $10,000 of our benefit. Then we take all of our other income, which includes tax-exempt interest. Now, in this case, we don't have any tax-exempt interest. We only have $40,000 distribution from an IRA. So our provisional income is $50,000. But if you recall, the first $34,000 of provisional income, $32,000 of provisional income is not subject to any tax if you're married filing jointly. Anything from 32 to 44, half of that amount, so in this case is $12,000 because we have $32,000 all the way up to $44,000. Half of that amount is subject to income taxation. So in this case, $6,000 in that band. Then anything above $44,000, 85% of that is subject to taxation. All right. So in this case, we have in the first band, we have zero. Go like that. Like this. Oops, there it goes. 0 to 32,000. Nothing is subject to taxation. 32 to 44,000, that's $12,000. So 44 minus 32 is 12,000. Times that by 1/2 is $6,000. And anything above $44,000, 85% of that is subject to taxation, which means we have 11,100 of our total Social Security benefit is added to our adjusted gross income. So now we got to figure out our AGI. Our AGI is that 11,100 plus the $40,000 we have of IRA distribution. So our total income in this case, our total AGI is 51,100. Now we do have to subtract 26,600 for standard deductions, and our taxable income is 24,500, and that's the difference. Our taxable income in this regard is 24,500, which puts us in married filing joint in the 12% bracket. Not high into it, but still into it nonetheless. Now, conversely, if you had 40,000 Social Security and 20,000 of IRA distribution income, only $4,000 in that regard is subject to income tax from Social Security. And at the end of the day, your AGI in that regard is $24,000 because we take your $4,000 of Social Security that's subject to tax plus, in that case, your $20,000 of IRA distributions. Add them together, that's $24,000, which is below your standard deduction amount, which means you have zero taxable income, none. And that's a pretty significant difference, my friends. Thus, don't overlook the benefits of Social Security. All right, let's keep going down. And let's find out what the cheapest places are to live in Maryland. Now, I went to high school, as I might have told you, in Silver Spring, Maryland. That's in Montgomery County. And I guarantee that's not among the cheapest places to live, or I should say the least taxed. Let's put it that way. We had right next to my little town was Tacoma Park, Takoma. And they call that the commie part of Maryland, like the communists had taken over Tacoma Park back in the 80s. I'm sure it's even just as bad now. Anyway, so here's Maryland. And the most tax-friendly places are out here in the Eastern Shore. Ocean Pines, never heard of it. Sounds nice. But all the other ones are right up in here. What county is that? That's Montgomery, Maryland. North Kensington. All right. That's Prince George's, yeah. That's number 5. That's number 5. So I'm looking Wheaton, Maryland. Okay, that's in Aspen Hill. That's in PG County, if I'm not mistaken. North Bethesda is in, I think that's in Montgomery County. Never heard of Leisure World. Kensington, I don't know if that's in Montgomery County. Wheaton was. We used to. That was just a hop and skip from when I was going to high school. And Aspen Hill, I think that was in PG County. North Bethesda is probably Montgomery. So if you're in Forest Glen, Maryland, I don't know where that is. If you are retired but you're working part time, making $10,000 a year of income, $10,000 from a pension, and $15,000 from Social Security. I'm going to turn my phone off there, and then $15,000 of IRA distributions. You're going to pay $5,900 in income tax to the feds and to the state. Your property taxes is pretty low, 0.85. That's not horrific. Actually, that's not bad. It's less than I would have thought. Sales tax is pretty high, but fuel tax is pretty low. So at the end of the day, retirement tax friendliness for this person in Maryland is 56.83, which is significantly higher than a lot of the states going up the Northeast for sure, and factoring in even like Indiana and some of these other states as well. Maryland is not as bad as you'd think. That's a fact. I mean, look, the sales tax is pretty high for sure. And the property tax is lower on the lower end. No getting around that. So there you go, my friends. That's the state of Maryland for you. As always, you have questions, thoughts, concerns, put them in the thing down below. Comment, questions, thumbs up always help me. And we'll see you next time with the Heritage Wealth Planning YouTube channel. Thanks, guys.